Aloha, it's Julie Zenless 365 Hawaii from Real Broker, and happy holidays and welcome to our island-wide real estate market update. We are going to be talking about November statistics in December, but also we're going to be doing something a little bit different today too. We're going to be doing a year in review in terms of what happened with mortgages and what happened with the real estate market on the island. And then we're also going to do a little bit of predictions for you guys. So we're going to use our crystal ball prognosticator and give you an idea of what's going to be coming up next year. We're not magicians, but we can definitely use our expertise to give you guys some information you'll find valuable. So we've got Delania Branham from Real Broker, and she's going to be talking about those special neighborhoods in Kona today. And then we have Nui Browning, and she is going to be actually doing double time. We've got an East Hawaii real estate update from her, as well as she's going to talk about the Waikoloa and the South Kahala
Aloha. Yeah.
area. And then Eric is going to be jumping in on the trend report and talking a little bit about what he thinks is going to happen for 2026. And then, of course, we have Travis Green, who's going to be talking about mortgages. And now that we're coming around the corner into 2026, it'll be very interesting to see what happens. And then we also have Angie Madrid, and here he is. Ah, Madrid. So, so let's get started with Travis will be talking to us about what's going on with the mortgage market. So Travis, go for it.
Great. So I'll just start with mortgage rates. We're kind of looks like we're going to finish the year right around kind of the low sixes. I just checked Mortgage News Daily and their kind of survey of lots of different lenders across the country for kind of top tier scenarios. And on average, their average 30-year rate for a survey response right now is 6.22. And so that's in line with what we've been seeing over the last couple of months. It has, we kind of had like a bit of a hump in the middle there, kind of in the lead up to the Fed meeting, which I'm going to talk about here in a second. But it has come down. So very pleased to see that. So the Federal Reserve met, I guess this was last week or 2 weeks ago, and they, as the market expected, they cut their benchmark interest rate by 0.25%. This meeting was a little bit unusual because, as I'm going to kind of mention a couple more times, the government shut down. So we had the longest government shutdown in U.S. history, and the Federal Open Market Committee was going into this meeting without the kind of level of data that they generally operate with, right? And so I think market expectations were leaving a little bit of room for the idea that like maybe they'll wait and see, maybe they don't want to like kind of like shoot in the dark, and maybe they'll wait for the data to come out before they make a policy change. Maybe they'll hold rates steady. But it was still like an 85% chance that they would cut rates, which they did. And then Jerome Powell, the Federal Reserve Chairman, kind of struck a bit of a hawkish tone at the press conference afterwards. And the message was that like the bar is kind of high for further rate cuts. They're not in a hurry to cut further. They really want to see inflation come meaningfully down. The thing that could change that and make them cut sooner would be further deterioration in the jobs market, which nobody wants to see. So let's talk about that next. We were in a data vacuum, kind of blackout in October because of the government shutdown. And so we've started to get some data releases, especially within the last couple of weeks here in December now. Some of these have some caveats and some asterisks because of how they were collected or how they were released. But I'm going to start with non-farm payrolls. And so the non-farm payrolls is the gold standard jobs report from the Bureau of Labor Statistics. And it showed a increase in employment in November of 64,000 jobs. This was a little bit better than the market expected. And they did report some of October. So we got kind of like a partial report for October, and that showed the economy losing about 105,000 jobs. Basically, all of that were federal government employees because during the shutdown, extended furloughs and layoffs occurred. And so that wasn't that much of a shock. Couple things I want to point out from this latest jobs report. So for the November 64,000 new jobs, 70% of those new jobs were in healthcare.
Oh,
So 46,000 of the 64,000 were healthcare jobs. Healthcare is a non-cyclical, it's not part of the business cycle in the economy, right? When there's more sick, old people in the country, there are more healthcare workers, and it doesn't tend to go with a business cycle. But 70% of the job gains in November, healthcare workers. Unemployment rate unexpectedly ticked up to 4.6%. So that's a historically pretty low figure. But when you think back to earlier in the year, we were around 4.1, 4.2. And so it's been increasing throughout the year. And this was not an expected increase. The increase seems to have come from an expansion of the employment pool. So there are more people seeking employment now than in the previous month. So again, so all of this, I've been reading a lot of things from different like economists and finance writers, and they're saying some of these reports that we're getting like kind of like grain of salt, because this data might be a little bit noisy, a little bit cloudy until we get a couple, 2-3 months removed from the shutdown. And so I want to touch on CPI, so Consumer Price Index. So this was the inflation report we just got. And that came out surprisingly lower. So the market had expected a reading of 3.1% annual inflation. And the headline number that we got was actually 2.7%. So that's meaningfully lower than the market expectation. Normally, when this happens, you would see a pretty big rally in the bond market, which would result in lower mortgage rates. We got a little kind of baby rally and a little bit of an improvement on mortgage rates, but it kind of didn't gain steam. It kind of backed off. Who knows exactly why? My theory is that same thing, like kind of taking things with a grain of salt, not buying too much into like, or not relying too kind of like wholeheartedly on these fresh reports. Particularly the problem that I've seen people point out with the latest CPI report is that their calculation of housing inflation, which makes up more than 40% of the total number, so it's the biggest single weight, their calculation of housing inflation, they just carried September forward with no change through October. So effectively, because they didn't gather enough data to like have a reportable number, and so because of the shutdown. And so what their report is saying is that there was no housing inflation in October. But what really happened is there was no data in that place. And so the number got averaged over, they just pulled September forward with no change. And so when you have that largest single component in CPI with no change month over month, it's going to bring down the rest of the number. And so again, grain of salt with that report, we'll see when we get into January, February, March, what the housing inflation, new rents and the thing that's called owner's equivalent rent, what that's saying. And we'll also see how PCE, the personal consumption expenditures, looks, because that doesn't have as much emphasis on housing inflation for their total number. And that's also why the Federal Reserve relies on it more. So that's kind of like a recap of like catching us up to, post government shutdown, mortgage rate and market stuff.
wow. Okay. But at the end of the day, we're stuck at 6.2. So
Yeah, but wait till we start talking about like the year in
future.
review.
Okay, when we talk about the
Yeah.
future, we'll get a big smile on
Well,
that
no,
face.
but also the year in review, right? So
Okay,
it's like
review. That's right. Okay.
we're gonna do both.
Nui going here, and she's going to be doing her double report about what's happening in East Hawaii as well as what's happening in South Kahala. So Nui, go for it. Let's see what happens.
Hello. Okay, so we'll start off with South Hilo first. The beginning of the month, there were 97 active listings and 15 sold in the month of November. Median sales price was $590, and the sales price ratio to current price was 97.65 in Hilo. So a little bit lower median price than the previous month. If we'll jump over to Puna, and in Puna there were 373 active listings last week, and sold in November were 55, which was down a lot. The month before, 91 sold in Puna, so it went down a lot. Median sales price was 400, and the sales to price ratio to current price was 99.36. So people are getting almost their asking price after they've done any price reductions. Oh, I didn't say days on market to sell for South Hilo. Sorry about that. The median was 38, so that went down a little bit from the month before. And in Puna, median days on market was 36. And then we'll jump right into HPP where I am right now. And you guys might have seen this house with Julie and Eric. We did a East Hawaii update in this house in October, I believe. And it is now under contract. We had the inspection today, and if you've seen Boomer on that, he's over there on the couch. He's here too. Anyway, so that's where I am today. I'm sitting in the kitchen and in HPP. And so on December 8th, when I pulled this, there were 86 active listings in HPP and 15 sold in November. And the median sales price in HPP was 455, and sales to price ratio was 97.39 with average days on market. Oh, shucks. I didn't median, sorry, I'm confusing everyone. So I'll go back to using median. Median days on market was 40 last month in November. We did see quite a jump in the months of inventory for South Hilo, Puna, and HPP was slightly higher than the month before, but there's about 9 months of inventory in all areas. So essentially, we are in a buyer's market now here on the east side of Hawaii, and we weren't there yet just in October. So, yeah, buyers should have a little bit more negotiating room here on the east side. So now I'm going to put my South Kohala hat on. All right. So we'll start in Waikoloa Village. And as of December 11th, when I pulled these, there were 24 active listings in Waikoloa. And in the month of November, there were 4 sales. The average sales price was $966, $950, and there's more negotiation happening in Waikoloa area and South Korea in general. The sales to price ratio was 96.75 from the current price. Average days on market 118. Shucks. I keep doing the wrong one. You want the median. We want the median. Median was 105. Moving along to Waikoloa Village condos. There were 28 actives on December 11th, and then only 4 sold in the month of November. The average sales price for condos in Waikoloa Village was $505 in the month of November. Median was $467. I'm sorry. Normally I circle the ones that you want me to report, and I wasn't prepared for that. So now I'm giving you more than you want to know, but so apologize for that, guys. The sales to price ratio to current price was 96.68, but from the original was 91.35. So,
91. Okay.
mhm.
Yeah.
And
Because it was pretty low last month too.
last month looks like 92.70 from the original.
Okay. So it's going down a little bit, right?
Yeah. And then median days on market 77. Okay, and then we'll go to Waikoloa Resort. This is the one that really blew my mind because I did this more than once because I was so afraid I did it wrong. Um, because there are currently 43 listings, active listings in Waikoloa and Puako for condos. Puako is like right by Hapuna, but it's kind of lumped into Waikoloa. And so there is 43, and last month only one sold. So right now there are 43 months of inventory in Waikoloa Resort, which definitely I think that would mean there's some opportunity for people. Um, the sales to price ratio to the current price is 97.90, but from original the was 76
Whoa.
last month. Yeah.
So
And
76 price, that's almost like a 25% haircut on the original price. And
mhm.
the houses are not selling very quickly. So
Yeah, these are the condos, the Waikoloa Resort condos.
yeah. Yeah, we have one of our realtor friends, Jana has a condo in there, and it's just been sitting months and months and months. So, wow, okay. Have you ever seen
Yeah.
months of inventory that high ever?
No, that's why I was like trying to do this over again.
Well,
When you
yeah,
like
it's like
rub your
wow,
eyes.
right? Yeah. We started
Yeah.
seeing that the investor interest start to drop probably like at least early this summer. So it shows that that's kind of what's happening there. Wow.
And I pull the stats every month for the most of the island anyway. And I have been noticing Waikoloa Resort going down, 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 and
Yeah.
that they're just sitting there, the condos.
Yeah.
Anyway, so the median days on market was 127 last
Wow.
month. Yeah.
Yeah.
Um, okay. So what are the single family homes in Mauna Loa, Waikoloa, and Puako? And there are six actives, and one sold last month, and the median sales price was, well, the sales price of that property was 2,010,000. And the sales to price ratio to the current price is 93.40 and from original 87.30. And the median days on market was 308.
Whoa.
But those are all, like the luxury
Yeah.
areas, so not really super surprised. And
I
then the
think 300
condo,
days is the highest I've ever seen since I started doing this show.
yeah, yeah, I mean, it's up there. They were patient, very patient.
Yeah.
Um, and then the Mamalani condos, there were 21 active as of December 11th, and then five sold last month. The median sales price was 1.625, and the sales to price ratio to the current price was 94.12 and from original 89.10 with median days on market 139. And then do you guys want to know about Mauna Kea too, or we
Eh,
don't need to do Mauna Kea area? Those are like the really luxury areas.
yeah, right. And this kind of
So
gives people kind of a flavor of what's happening up there is that obviously houses are sitting. Deals are opening up every moment, friends. So, wow, okay. Well, thank you, because now we have an opportunity to kind of figure out what's going on over there too. And Nui, you and I basically talked about the market in East Hawaii for the most part is not obviously as shocking as what's happening in Kahala. But you're watching it. It's kind of a flat market, right? In East Hawaii, it's a kind of just like plenty of houses on the market. Just
well, it's more buyer's market now because we're over the 7 month mark, in
yeah,
all three
yeah,
areas. So technically we're in a buyer's market, but you are like what's happening, what I'm noticing a lot is that people that bought in like 23 and around that time, if they're trying to sell, it's harder for them because they're gonna lose, they're usually losing money, and so that's why they're not wanting to drop their price, and so
right.
it's sitting on the market. And so I think that's what's affecting it potentially.
Okay. Well, that's what's happening. So, okay. So, Delania, do you want to go? Okay. Let's make you the dun, dun, dun. Okay.
We're
And
gonna
yeah.
we're
Okay.
gonna jump in on our spotlight neighborhoods. We're doing Pualani Estates, we're doing Lani Condo, and then Lokahi Makai. So two residential, one condo. Starting in Pualani Estates, looking at November, there are currently two active listings, one at 950,000. It had a $37,000 price reduction and it's been on the market 43 days. The other one active right now is 1.35. It's been on the market 38 days. It's not had a price reduction. There's three under contract, 899. They were on the market for 11 days before they went under contract. 1.35. They were on the market 14 days before they went under contract, and then 950,000. 20 days in the market, they went under contract. So that's nice activity in that neighborhood. In November, there were two sales, 979,000. It was on the market for 216 days, and they dropped it a total of 20,000 before it sold. And then, I'm sorry, it sold for 20,000 under asking price. It was listed for 970 or 999, just under $1 million. And the other sale in November was for 1,050,000. It was only on the market for 5 days, and they dropped it, or they sold it for 50,000 under asking. So they were quick to get rid of that one. And this month, because we're in December, we're at the end of the year, I'm doing a little mini wrap up on each neighborhood. So looking back over the entire year in Pualani Estates, it was really consistent activity, even though over the months that we've done this, we've seen some highs and lows. But realistically, there's always been 2 to 3 active listings each month, 1 to 2 sales per month. The lowest sale, there's one for 699,000, but that was a really weird sale, so I don't count that one. So over the course of the year in Pualani Estates, the lowest sales price was 923,000. That was over the summer. The highest, the first one was in January for 1.24 million, and the second one was in September for 1.1 million. So if you look at the numbers I just recited for November, realistically over the course of the year, we've stayed right in the same lows and highs, not too far off. So consistency is the theme for this year. I'm going to scroll down to Lani condos, and these are always fun because there's a lot of activity. November, so currently there's 4 active listings. They are listed between 479,000 and 555,000. 3 of those have been on the market under a month. Well, one's like 36 days and the other 2 were less than a week. And then one has been on for 297 days. There's always those sellers that are just going to stick it out.
Yep.
See when if it's going to sell, it's going to sell. There's 2 under contract. One went under after 11 days on the market, listed at 469.9. The other one went under contract after 8 months on the market. So it can happen. And that one is listed at 509,000. And then November, there were 5 sales, 440, 469, 470, 513, and 555. The 500s are usually the 3-bedroom versus the 2-bedrooms are usually under 500. Wrap up for that neighborhood. It's been interesting, and we know there was the whole issue with the insurance rates or the monthly maintenance fees because of the insurance rates. So they spiked and then they dropped. So overall, in the spring, we were averaging 10 to 14 listings per month. Summer it dropped to about 8 or 9, and then the fall we're down to about 4 or 5 listings every month in the fall. So they've had good activity. They're starting to clear out some of that inventory. Most months there's 2 to 3 sales per month. September there was 5, and November there was 5. So they're finally getting caught up with things there. The lowest sale over the year was in September. That was 430,000. The highest was in November, and that was 555,000. So again, instant pricing. And then the last one we're looking at is Lokahi Makai, which is usually not a ton of inventory in that neighborhood. It's not huge, but it was fall's been very interesting in there. So right now there's 8 listings active, which is I think the most we've had all year by far.
And that would take the cake since we're trying to sell a house in that market right now.
Of course, everyone that's listed right now is just eating themselves up because 8 listings in that small of a neighborhood is tough for a seller. 2 of those are listed under $1 million. They are at 872,000 and 899,000.
And there's complete fixers.
And then the other 6 are listed between 1,050,000 and 50,000, and then the highest is 1,410,000. There's one currently under contract listed for 1,449,000, and it went under contract after only 6 days on the market. And then one sold in November for 950,000. It was on the market for 53 days, and it sold for 35,000 under asking price.
Under, you know.
Yep. And so wrap up in that neighborhood. Over this in the springtime, we were looking at like 4 to 5 active listings per month. Summer went down to about 2 to 3, and then currently there's 8. So, overall summer we've seen the dip. I think just because that's our market in general is a little bit quieter. But then every month there's usually 1 to 2 sales per month, and then the high-low sales. For Lokahi Makai this year, the lowest sale was 899,000. That was over the summer. The highest was 1.215, and that was during the spring. Will be interesting to see looking next month at when some of these close, especially the active listings over the next couple months, because having ones of the 1.4, they might top out from that 1.215 that's currently the highest. But it was interesting to look back month over month in all 3 of these neighborhoods. Like I said, even though we've seen, kind of a little bit of peak and valley in pricing, overall, it hasn't really gotten too far off of where we were the whole year.
There we go. Okay, there we go. Hold on. Okay, so speaking of that, if you are new to the show, the 3 neighborhoods that Delania was just talking about are actually in North Kona. So they're basically like Kailua Kona neighborhoods that all look a lot alike. But in general, if you guys want the overall West Hawaii real estate update, Lance Owens did that with me earlier this month, so you guys can bounce back to what's happening in West Hawaii for November. But just so you guys know, the number of sales for single family homes was 28 this year, and last year it was 22. So there's a 27% increase in the number of sales for single family homes. But across now that we're into the end of the year, but that was a drop of 10%. From last year. And then for condos, we sold 22 last month. The year before that was 28. So we actually dropped 21% year over year. And then for the whole year, we're down 4.41%. And then in terms of single family home prices, we are at 1,103,500, which actually is a 12% decrease from last year when it was 1.267. And then for condominiums, we're at 632,412, which actually is a 10.95% increase over last year's, where the median price was 570. But year to date is we lost 4.62% in terms of what people were getting for their condos. So there you go. And so what was going on with what Delaney was saying is that across the board, what we have found is it's not this and it's not that, it's somewhere like that. So, okay. So, Annie, what the heck is happening in South Hawaii? Unmute yourself and I'm going to spotlight you.
So it's kind of crazy right now. I was looking at the inventory. So those of you who aren't aware, or maybe you do follow, on the south end of the islands where you find some of the more modest price properties, because we're in the, we're farther away from services and stuff. And so it's reflected in that. And also because the majority of the communities are in Lava Zone 2. And so that's pushing prices down as well because of the high cost of homeowners insurance. There are currently 81 properties on the market in the Ocean View area, which includes Ocean View Estates, Hawaiian Ocean View Ranchos, the Kona Garden, and what's the other one down there? Not Leilani Makai. It's called uh, Konakai. Not Konakai. Kulakai View Estates. Anyway, 81 properties active, price between $37,000 and $370,000 on the market. So, I mean, right now, none of the higher price stuff is really on the market and moving, you know. There are some, that's kind of where we're at in the market. It's interesting because of that. There are the unpermitted properties that are getting priced where they're at. The price point to get to a permitted home, you have to be above $279,000. We've got lots of properties where, now we were seeing unpermitted homes that are priced and selling in the high 200s, and I'm not quite sure why. That's kind of weird. I
Because
mean,
that's all the money they have, maybe, Andy.
right. I mean, it's people that obviously either don't want to carry a mortgage, so they want to pay
Right.
cash for everything, or they don't want to carry a mortgage because they can't afford the homeowner insurance. But I mean, that's just a lot of money to spend on a property that you can't get insurance on and can't, can't if you have a catastrophic event, you're kind of messed up. There are 6 properties that are currently under contract, priced between $55,000 and $475,000. 2 of them are priced at 239,900. One is permitted, one is not permitted. Both are under contract, and they're fairly identical. They're both 2-bedroom, 1-bath homes, at
Well, that's
$230,000.
pretty good. I mean, to buy a permanent home for
To
200.
buy a permitted home, that one's under contract, but
Yeah.
then if somebody else went and bought an unpermitted home at the same price. So,
Yeah.
it's just I'm not sure what the buyers are. And I think agents right now are taking listings. They want the listing, they want the inventory, but they
Hmm.
may not be driving the seller in the same manner as they would be if the inventory, if things were moving more.
Hmm.
Um, on land, there are 52 properties that are under contract right now. No, 44 properties. The reality is that there's a fair number. It's hard to get to the right number. There are a fair number of properties that aren't closed out in the MLS. The agent is no longer in business and never closed it in the MLS. So that's something I was actually sending a bunch of emails off to the MLS about these properties that have been sitting like in a contingent status since 2021. It's obviously,
Whoa.
those aren't good. So it kind of skews the number.
Hmm.
Um, there were eight properties sold during the month of December between 72,000 and $326,000. So the median was 147,000. Median days on market's 18. But the interesting thing is that the sellers are getting their prices, 96.95% is the sales price to list price ratio,
Which is pretty good,
which is pretty good.
especially compared to Waikoloa Resort.
Yeah. I mean, because it's not common for um, some sellers, you don't see a lot of reductions on land. It's like they put the land out, they just let it sit. So you're
Hmm.
not seeing a big change. They've seen multiple price reductions. So that's what's happening in the Ocean View market, and it's getting more active. So, I opened escrow on a property today in Ocean View, representing both the buyer and the seller. I have a counteroffer out on another property here in Ocean View. Um, we'll see what happens with that.
Yeah.
And when I talk to some other agents, they're seeing more activity on the market there. But again, it goes back to where else are you going to buy, where you're not spending so much money.
Right, right. And so, Andy, when we get done with listening to um, do everybody, it looks like okay. So what we're going to have to do, actually, we're going to jump into a larger discussion about what everyone saw for this year, and that way you can also discuss about what you think is going to happen. So let's do that. Let's see. Hold on. Let me remove your spotlight. Go back to the group chat. Eric, do you want to lead the discussion on these different points about what people saw for the year?
Sure. I thought I would just I picked a few items that might be good to talk about with everybody and see what they have. And of course, they're the important ones. And I'm curious to see what Travis has his little mortgage predictions of what's going to happen next year with that too. So for the highlights for this year, let's talk about home prices. What is I've got some couple thoughts here, but does anybody have any? Are they going up? Are they going down? Did they go down this year? What happened? You know what I mean? Because it was actually from what we talked about and what actually happened, where some of them were slightly askew.
hmm I'll tell you guys real quick. I've been watching what they call a hot sheet, which the realtors get a chance to see what comes on and what comes off the market, what goes contingent. And for weeks, every single house did not go at asking price. None of them. So that's what's happened like, to me and watching what's going on, at least in the fall. We've just been seeing more and more people cutting prices. But overall, I think this year has just been this up and down experience of waiting for the buyers to show up. And they've been pulling back because of the uncertainty in the market. So I think that's kind of hit the Western white market.
Yeah, definitely. And we could say that, the home prices were slightly declined would be a word to describe what happened this year. Yeah. Yeah.
Yeah, I do, at least down here, I've had a couple of clients that have taken price reductions on their property. Some of them are significant, some not too much. Interesting, which I didn't get to during the kind of overview, but not in Discovery Harbor, but down in the south, very south end of the island, there were two sales in December. Both closed over asking price. One was on the market 10 days, listed
Yeah.
for 459, closed for 460. Obviously, there's closing cost assistance in there, I'm sure. The other one listed at 599, closed for 610, 120 days on the market, but again, closed over its asking price.
Yeah.
So, but by and large, uh, uh, a fair amount of price reductions, particularly in the higher end, in Discovery Harbor, there was just a lot of inventory there. We have a lot of inventory kind of all over, but yeah,
But we would say that, could we not say that it's crashing though at this point? You know what I
oh,
mean? That's
no.
everybody's waiting for the market to fall out, and everybody agrees that it's not really falling. It's just kind of going along.
Correcting. There's a little correction
Correcting,
going
a
on.
slow correction at the end of the day.
Yeah. Yeah.
Another
Yeah.
year we might get there, right? Okay, and then of course this year was the days on market increase, right? I mean, that was the shocking one that we all saw this year, definitely. Does anybody have a good story on how long they're? What was that? The biggest one we saw just recently? How many days was that? 300? Was that Nui with you? 300? Yeah.
Not her personally.
No,
No,
I get it. I
no,
get it.
that would be me personally holding onto a condo for almost 6 months and begging everybody to help please bring in a buyer, which they finally did. And now we're going to close escrow at the end of the year. So hoo-ha. That took a long time. And so the condo market was definitely super soft during the summer and was like
And then
kind
and then that kind of leads into the next one, that we can assume that all the overpriced listings sat like there was no tomorrow.
yeah, yeah. But it's interesting with what happened with when Delaney is talking about it, that everything looked like it was kind of fine in most of those markets until now at Lokahi Makai, 8 houses on the market.
We're just saying that we're chalking that up to just, it was coincidental timing on that whole thing is what it is. Because it's a good neighborhood. It's not like there's anything wrong in the neighborhood, and it's not like
No, it's just
or anything.
it's
It just
interesting
happened
that yeah, the ones have come off because it's been a hot. I mean, I think if you want to chime in on this one, the buyers have had a chance to look around for quite a long time. So they've been like able to kind of say, do I really want that? I'll look at 18 different houses. And so I think that the buyers have had more opportunity to get deals by asking sellers for concessions because there's so much inventory on the market.
Yeah, and sitting there for a long periods of time really helps out softening them up a little bit, doesn't it? I mean,
Yeah. I mean,
for 6
you saw
months.
some of that too, right? In East Hawaii.
Mhm.
With
Okay.
being able to ask sellers for
Yeah, that you have a buyer. Let's say you had a buyer, and you'd say, "Hey, sell me a house." Okay, are you in the market right now? Yeah. Okay, let's go out and look around for houses. Before, it was like they were scrambling to try and find anything that was for sale that hadn't been scooped up already now. And now they're like this, yeah. I'm taking my time.
Well, but it is kind of crazy though. Like the homes that I've had run into multiple offer situations twice in the past month. Luckily, we got both of those under contract, and even with the multiple offer situations, I was able to still ask for a seller credit
No, wow.
on one of them. Yeah,
I'm
and
doing a lot off market.
we did raise our offer price, but still we got um so we were able to ask for a concession.
Yeah.
All right. So the other thing that happened this year,
Andy, wait, Andy.
Oh, I
Did
said,
you want?
it's like this year. So, um, I'm finding that kind of right now, there's sellers, they're pretty honest about, when we're trying to figure out their motivation. I've had sellers just say, hey, I'm not motivated. There's a listing in Orchidland. I spoke with a seller 2 days ago. They're like, you know what? We don't want to drop our price. We're just not motivated right now. Okay. So they're going to have to go in a different direction. They understand they won't get what they want out of it. But yeah, I was going to say is I've made more offers on off-market properties. The one I put in escrow today, that came together kind of a little bit, it was the seller and the buyer actually met together. Then the seller called me and had me write it all up. I'm writing an offer that's out the door now. It's an off-market property, and I've done two earlier this year to help buyers get into properties.
Yeah. Wow, that's cool. Delaney, do you have any thoughts on that? Have you
Yeah, it
seen
seems
any
like
buyers?
yeah, it's what it seems like if the property is a really sweet property, like just really nice property, it's gonna move quickly. Or if it's priced really well, it's gonna move quickly. And if you don't have one of those, then either you're not willing to really cut the price and you're just gonna sit on it, And I think a lot of sellers, like Andy said, a lot of sellers are just like, let me put it on the market and see what happens. If it sells, it sells. If not, we'll give it some time. There's so much different motivation out there for sellers. Buyers always want to buy, but the sellers, they're kind of they're a little all over the place right now. And I think, at the beginning of the year, they were very unrealistic about the market. I think by now, sellers are more realistic. So it's really just their motivation when it comes to pricing.
So
Yeah.
didn't
Yeah. In fact, okay.
I just saw something on I think you correct me if I really to Julie that we saw that 85,000 people took their houses off the market just recently, right?
In on the mainland, yeah.
Nationwide,
On the
nationwide.
mainland,
But it just shows that if they're not getting their prices and they realize it's not going to
Yeah.
go, instead of they'll just won't, just take it off. Everybody says we'll wait till spring till see what happens.
Right. Well, we also found out that and you help me, you guys, this is how this is going to go too. A lot of sellers bought into the market where their mortgage rate was 3.2%.
Mhm.
So they're kind of playing that make me move game right now, where they don't have to move because they're sitting on these beautiful interest rates. And unless they can sell it for what they want to get their house on, the market, they don't care. And so we've actually we've met with three different sellers who basically said the same thing. If I don't get the price I want, which was more than what we thought they should get, they're like, well, I'll just let it sit or I'll take it off the market if I can't get what I want. And then getting that statistic where 85,000 people said the same thing and just said, I'm just not going to play the game. And just so you guys know, the Redfin note came out that there's 1.8 million houses for sale on the market right now, but there's like 1.3 buyers. So there's 500,000 sellers who aren't going to sell their house right now. So we're definitely in a market where sellers are going to have to think about what they're going to do if they have to sell their house. So
They're shrinking inventory too, because you've got the ones that are in those positions where we're not going to get the price that we want, so we're not going to sell it or we're going to take it off the market. And then you have sellers that are also seeing what's happening in the market, and they're like, we're not going to list right now. We're going to wait till spring.
mhm.
I have had multiple conversations this week with sellers like, let's wait till after the first of the year or a price reduction. They're like, I think we're going to wait right now and just see what happens through the holidays. We're going to wait till after the first of the year. And I've got, other people, it's like, yeah, we're going to list it, but we're not going to list it till the spring. So,
Yeah.
and buyers are kind of waiting for, I don't, they're continuing to rent. Some buyers are more motivated than others. But yeah, we'll see.
Yeah, it seems that we're kind of in this holding pattern. So, Is it time to jump into Travis, or
I was
are we
I was
still?
going to say that ties us right into if Travis could kind of give us a little, what happened this year in mortgage rates. You know what I mean? If you could do it, just a quick kind of, what's happening and how do we get to where we're at?
Yeah. So I think the big story, because there were a lot of fluctuations in the middle, but we started the year over 7% for the average 30-year fixed rate mortgage. Like I just looked 1 year ago today, on average, it was like 7.25. And today I just said it, according to Mortgage News Daily, it's like 6.22. So a full percentage point better. There were some uncomfortable times in the middle there, like April comes to mind, where rates shot back up over 7% before kind of drifting back lower gradually till now. But that's the big thing, is we started over 7%. We're finishing the year closer to 6%. That's pretty close to the revised Fannie Mae, Freddie Mac, and Mortgage Bankers Association target expected interest rate. Looking at unemployment, we started the year January 2025. Unemployment rate was 4% flat, 4.0%. We're ending the year now at 4.6%. We'll see next month what the January what the December report says, but 4% to start the year unemployment, 4.6% to end the year, and then inflation started the year close to 3%, ending the year close to 3%, and that's something that the Fed has openly worried about for years, is that inflation will anchor higher than their long-term target. They set 2% as their annual inflation target number for a reason. And 3% doesn't sound like a whole lot different, but 3% of everything every year, all the time, forever, it's a big difference. So hopefully that doesn't continue, but everybody, the mood is so rabid to just cut rates. And hard to see, hard to see that changing on its own. A couple other things I want to say just for the year in mortgages, the things that weren't, maybe like if we could, I wish we could run like an in memoriam for like the 50-year mortgage.
Oh yes, no one's talking about that anymore, right?
Yeah, exactly. Yeah, they popped their head up and they were like, "Whoa, what about a 50-year mortgage?" And the whole world was like, "Shut up." Same thing with like the portable mortgage. Like, bond investors were like, "No, thanks, not going to do that." But that was this kind of like nibbling around the edges, not addressing like anything head on for housing affordability. But it shows that like across the political spectrum, and this is what I hear at my company from, our head of capital markets is the vice chairman of the board of directors of the Mortgage Bankers Association. It's like NAR, but for the mortgage industry. And he worked at Fannie Mae for 20 years, and like he's very connected. And he was like, I will tell you what, he was like, it's a unique time when like I can get a meeting with anybody in Congress right now. He was like, from Tom Cotton to Elizabeth Warren, they take my calls. I can get into their office. Like everybody is focused on affordability of housing. He was like, it cuts across all political lines, and they all know that collectively their fate will rise and fall on their ability to do something about that. So I think that that's a good thing. And hopefully we get some more serious policy moves from Bill Pulte at FHFA, and not just like 50-year mortgage.
No, we need more housing starts. Yeah. What else you got, Eric?
Okay, so the next one is I'm coming to the end of our year, but the one that's kind of striking that we should probably talk about is condos. And condos have been kind of influenced this year by what happened with the insurance and the HOA fees and things like that. So I just wanted to touch base and see if anybody had some thoughts on the craziness of condos.
Tell America about what happened with the Pines.
So, all right, I'll start. The Pines lowered their. So let me back up. It's always good to give kind of just a quick backup of what happened here. After we had very consistent insurance rates here in Hawaii for a very long time. When the Lahaina fires came, the insurance people decided to actually look carefully at the insurance rates here in Hawaii, and they realized that we were underinsured, and the way that we were doing insurance left a lot of liability for the companies. And so because of that, they switched around how they were going to do. And my personal opinion, I think they wanted to make some of their money back. So they essentially rose the insurance rates up pretty significantly, probably 300 to 500% would be where they did. And because of that, of course, all insurance rates skyrocketed across all, particularly condominiums is what we're talking about, not single family houses. And with that happening, all of a sudden condos, the HOAs and condos, let's say for a, $700 HOA went up to $1,000, right? So it went anywhere from probably $200 to $300 up a month. And of course, when you raise up that much, it definitely slowed down the condo market, which was very, showing in all the numbers that we were just talking about earlier today. So now what is happening is that they are sort of loosening up, and for this next year, they are dropping the insurance rates to a significant amount, back down a significant amount. And a good example is the Pines. And I don't know the exact numbers, but I think they used to be right around, correct me if I'm wrong, Julie, somewhere around 800, and we went down to, low 600s is where we went down to. So that was, a pretty significant drop. So now all of a sudden that makes the Pines a pretty desirable place, but it's going to be what usually happens with insurance, and this was, since we've talked to some of the people, is that it is going to be across the board. It's not just like one condo complex that gets the discount. It's everybody sort of based on the same one. So we could see moving forward.
Not that extreme now. No,
not that extreme, but we're going to see. But essentially, at the end of the day, is that they're going to go. HOA prices are going down. So, but that when they went up, it definitely made condos not very desirable for a lot of people.
Yeah. And so, in fact, one of the houses that was sold last December, an investor called me from California and said, sell my condo immediately. I think with the HOA fees going up, the prices in that complex are going to go down, and I want to get out. And so we sold it. And now a year later, they dropped the HOA fees. And so now's the deal. So yeah, so that's if you guys are like if you're thinking about condo and you're thinking about being in a place where it's like a little house that looks like a condo but it's not stacked, the Pines is a great place to look. And now that it has lower HOA fees, it's a little bit more affordable. But Eric, one thing too is that just that people since we've sold condos this year, the sellers were very happy to report. Make sure that you tell the buyers that our condo prices have come, the HOA fees came down like $30, $40, $60. So not hundreds of dollars, but at least in some of these, it's come down a little bit. But the Lani had come down quite a bit after the summer. And that's why you saw what Delaney said with a lot of houses started selling again when they got that stabilized. So in terms of, what's going to happen in the future, at least it's not going to go exponentially up. But I do think, and you guys help me if you will, our tourism numbers are down. And that's going to affect the ability for investors to get top dollar for filling those condos full of happy vacationers. And so that's something to keep an eye on in terms of what's happening with tourism on the island too.
All right, so then let's move on to the next year's outlook, right? That would be what's going to happen, and I know we don't have a crystal ball, but we, at least we can maybe look 1 month forward from where we are now. What does everybody feel about price outlooks? Do we see that we talking about maybe next year going up, or are we going to sort of continue to deflate, a little bit of a deflation going on? Anybody have any thoughts on that one?
I think prices will start going back up. It's because I see.
Really?
I do. And the reason is because we're still a more value oriented part of the island. I see them down, especially down in the south end of the island. Now, I know it's going to happen up there, but I feel like we're near the bottom.
Oh, sorry. Okay.
I would say that it's interesting. I would describe it as this. I see that there's a lot of people that have been on the fence or sitting on the sidelines waiting to see what happens. And after, I'm going to say a lot of them waited probably almost a year at this point. And the answer, it seems to be, from today, I don't know what's going to happen in the future, but that they've kind of said, it doesn't look like the world's going to fall apart, a lot. So we can just kind of, indecisiveness is okay. And we need to get back into it. So we're starting to see a little more action now than we have other times. So, Andy's right. Maybe the prices are going to reflect that as well.
Yeah, I think I agree. I think we're going to start seeing some more activity. Maybe the days on market's going to go down. I think it could take a while for prices, just depending on the area and the inventory, for the prices to really go up a ton. But I think overall, maybe the market's going to start getting a little more active and a little bit more robust.
Well, we had 6 or 7 buyers come this year, look around, and then they said, you know what, next summer's looking better. So I'm saying that if we're going to see an uptick, I think that we're going to wait until sometime April, May, June. That's what I'm thinking.
Yeah.
Okay, so we could conclude that also that you think that with the idea that we might actually get some more people interested, that inventory might go down next year.
Oh yeah.
Yep.
Well, according to Lawrence Yoon at our the thing that we all attended, he said that there's going to be 14% more was it inventory or activity? I think it was inventory.
I think it's the
in the
14% more houses on the market.
Yeah. Okay,
Yeah.
yeah.
But he was kind of like saying that he doesn't see over the top demand, but he said it sounded like at least it was going to go up a little bit. And he didn't see how housing prices going down that much either.
Yeah, and I can't imagine that they would, just because I know the president does not have control over the Fed, supposedly. But we are supposed to be
At
getting
least
a new
not till
Fed
May.
chair. Yeah. So we're supposed to be getting a new Fed chair, and then I just really don't think he is going to allow this big drop to happen because, well, we all know him. So I don't think that I just don't know that he's gonna let that happen, especially with what just happened, with the short-term treasuries and all of that. I don't see the prices just like falling drastically. I kind of think they're gonna hold steady, in my opinion. Yeah.
And we kept hearing, from Travis and also from Lawrence, that 6%, right? At the end of the day, we're not going to see. Well, okay, that's what I was going to ask Travis too. That if the employment numbers keep coming in lower and lower, isn't that sometimes a sticking point for them to kind of lower the rates if unemployment starts to go up?
Yeah, for sure. For sure.
If we continue to see a softening employment market, but then when people don't have jobs, it's very hard for them to buy homes. So we don't really want that.
Yeah, we could have a whole series of videos about the K-shaped economy and
I've heard about the K-shaped economy.
Well, so much of consumer spending that's happening right now is being done by basically the top third of income earners in the economy, and those are by and large the property owners, and they also are the people that have money in the markets, and the S&P 500 is going to finish up 17-18% for the year.
I wish I'd gotten in.
Well, it's just and everybody's talking about the AI bubble, but the dot-com bubble was 5 years of insanely high returns, and people were calling that out in 96, 97, didn't burst till 2000, right? So I don't know. I think even if unemployment goes up, and even if inflation remains anchored at 3%, I think the Fed will cut. I think some rates will improve. I think the percentage of households that are more or less unaffected by whatever's going on with rising unemployment will probably buy more assets. And that includes real estate. I think they'll continue to do what they did and buy precious metals and invest in stocks and buy real estate.
Yeah, they also said something, I think you and I were talking about this, that when you have inflation and you have the treasury, so when we were talking about this in our last thing, Nui was talking about that they're basically printing more money. And then I did a little research on the Treasury bill.
Deficit spending, yeah.
Yeah, it's like whatever. But in a market where there's going to be more inflation, they say put your money into hard assets, and real estate is one of them. And if you're starting to see, let's say Waikoloa Resort condos 30-40% down, your market that might be an opportunity to buy something that's not going to cost, what it was, 2 years ago. So like when you said people who have high worth might see this might be a good time to buy, investment property at a steal. But I don't know. It'll be interesting to see if the investors kind of like, want to come back into the market. But obviously there's a lot for sale right now.
Yeah, for people who are ready and able, I think it's a great time.
Yeah, yeah.
I've got a fairly active pipeline. I've got people right now looking for condos, waterfront condos, budget's $1 million, $1.5 million. And they're just looking for the right one. They're kind of not really paying attention to what's happening in the market. They're just looking to see where they think the best value for them is. I think the bigger issue is everybody's always, I'm very cautious when someone asks me, is it a good time to buy or is it a good investment? Because a good investment for one can be not a good investment for somebody else. So I'm reluctant to say, yes, buying that condo is a good investment, because you never know. I mean, to me, I'm a condo guy. I'm not a fan of owning a single family home. It's too much freaking work.
Same here. I lived in Miami for so long, so I'm so used to condo living, and so a house is a lot for me and my single self. I don't want to fix things. But one thing maybe Travis has some insight on this is that there are a lot of programs because the wealthier and older, oh gosh, what's the word I'm looking for? The wealthy and older folks are the ones that are buying right now. I have been noticing a lot more programs to help like first-time home buyers or those that don't have their full down payment, and so they're taking out second loans. And so that I've had a couple of people jump into the market because of that, and maybe you could to that, Travis.
Yeah, so I think actually the Senate just passed I think it's like the Housing Modernization Act or something. It was a bipartisan bill that passed the House and the Senate, and I just kind of skimmed it. I just read this article today, but it was about modernizing these kind of like housing initiatives and affordable housing financing programs, because those are often run on like the state or municipal level. So I think it was like just kind of giving allocating more resources and better guidelines for those. But here locally, we are, so Guild Mortgage, not often honestly that I like plug like, hey, Guild Mortgage has this like cool thing, but I'm going to do that real quick. So I don't even know if this is like announced yet or if I'm even supposed to say anything, but Target is, free beer tomorrow. The target is, I think, early next year. But we are going to be ideally, hopefully rolling out a truly zero down conventional mortgage program.
Wow.
So we currently have a zero down FHA. And it's typical FHA purchase loan coupled with a down payment assistance, either grant or it's like a second mortgage that they can either repay or is forgivable. There's two options, and the difference is basically the interest rate. And so for a conventional loan, for a first-time home buyer, which in conventional financing is somebody who has not bought or owned real estate within the last 3 years, the minimum down payment is 3% for just a conventional primary residence purchase, Fannie Freddie. And this program will hopefully achieve the same thing where the borrower gets that 97% Fannie Mae or Freddie Mac home loan, conventional mortgage, and then there will be a second mortgage that will cover the 3% down payment, and that will either be repayable or forgivable. And so that's hopefully coming out next year. That's huge because like we have the FHA thing right now, but like FHA loan limits are currently 571, 550, and they're only going up to like 586, 500 for Hawaii County. And you can't use FHA in Lava Zone 2. What you can use in Lava Zone 2 is Freddie Mac. And so, a value buyer, Freddie Mac, Lava Zone 2, that's going to be big, or in just kind of more the affordable areas, people who maybe make too much for USDA financing, because USDA financing is a zero down program, but it's affordability targeted. It's like means tested. So you can't make too much money, more than their guidelines allow, and still qualify for the loan. I have one going right now that's USDA, and it's wild. Like the family that we're like, we just got them in because you have deductions for like, the number of members of the household under the age of 18, and childcare expenses we get to like deduct from their income, their qualifying income, to help them get in under the wire of that. And so we do have all those programs. I think there is one specifically locally rolling out next year as well. That's kind of like a down payment assistance program. I think that is FHA though. And then honestly, American Savings Bank has a very good Hawaii focused, affordable. It's a conventional mortgage, and it uses a discounted interest rate based on what's called like Home Ready, which is like Fannie Mae's affordable housing, but that has income limits. So American Savings Bank took that same program, same pricing, and just eliminated the income, or raised the income cap, so that it made sense for Hawaii people.
Wait, but Travis, you can help people with the American Savings loans, right? You don't have to go to American Savings.
I can't do those.
Oh.
I want to get my company to like copy that. I went to this thing in Honolulu in October that was put on by Housing Hawaii's Future. It was so cool. And this like incredible guy from American Savings Bank got up and talked. And he was like, spearheaded this program, and he was like, because Guild was one of the kind of sponsoring presenters at this panel discussion too. And he was like, look, I want Guild Mortgage and, Central Pacific Bank and, First Hawaiian. I want all these companies to copy what we have. He's like, we can only do so much. We're only going to help so many people. And it's not going to take anything from us if everybody else copies this exact same program.
I will say, you didn't want to speak, you didn't want to brag about your company. I will brag about your company. I love working with you guys. Your company is awesome. You have so many different programs, and I feel like every one of you are so trained so well. So, yeah, but I'll do the bragging
Thank
for
you.
you.
Yeah, I'll second. Travis is like the man. He gets all my people to their houses, and he keeps up to date on communications, so where people always know what's going on. And yeah, good. Yeah, if we can do a year-end woohoo, Travis Green woohoo.
Woohoo! Thanks.
If you're looking to buy a house in 2026 and you need to get pre-qualified or get a pre-approval, talk to Travis, because a deal might show up, and if you're not ready to jump on it because you haven't gotten pre-approved, you're going to be a sad person in 2026. That's my prediction. So,
It's true. Thank you.
I know that you guys have things to do, and I so appreciate you guys always lending your advice and your insights and your knowledge to this basically podcast. We have heard from the public quite a few times that they really appreciate this and that they get a lot of value out of it. So if you are watching this, please always say, please subscribe, ring the notifications bell. And also, if you want this actually emailed to you, join our Ohana, sign up. I get out a monthly real estate newsletter to the people who are on that list. That way you never miss this as it appears on YouTube, because it goes right into your inbox. And so also, if If you're looking to use any of my beautiful professionals, information is down below in descriptions. I'll give you guys access to the Money Man, Travis, and also how to get a hold of my professionals who will help you around the island. And I wish you guys all a very Merry Christmas and Happy New Year. And we will see you guys in January. And thanks again, you guys. You've done a great job for us this year. Thank you.
Thank you.
Merry Christmas.
Merry Christmas, everybody.
Aloha.